what are the tax and legal benefits of making an owner loan into my LLC rather than capital contributions? Oh, yeah, you had to pick that one.
Well, we've had a lot of clients actually ask this one recently, so wanted to bring a little bit of knowledge out there about it. The LLC, again, just like the last question, how is that LLC taxed? We would do something different perhaps if it was a disregarded entity or a partnership versus a S Corp or a C Corp. They can all have different outcomes depending on how we do it. So if it's a corporation, a C corporation, we're generally going to call it a loan. We call it loans from shareholders. Why? Because that's money that the corporation can pay you back later on when it's finally profitable. If we call it a like an additional paid-in capital or stock on the C corporation instead of a loan, you're not really ever going to see that back because it's built up in the value of the stock. In other words, the corporation doesn't owe you anything now at that point. So that's why we like the loans. We get the chance to have it paid back to you. In the case of a C corporation, in the case of a S corporation, you can go either or. It could be a loan, but we usually call it stock in that case because that ups some of your basis and allows you to take maybe some different deductions perhaps that might otherwise be limited depending on the type of loan that we have to the S corporation. And if it's a partnership, again, Toby will go probably a little more in depth on here, but you could call it a loan or you could call it a capital contribution. You may be better off calling it a what did we decide, the capital contribution?
No, here, let me give you guys a scenario. Elliot and I we buy a property together and we each put $10,000 in and we contribute that. And the property, we've owned it for a couple of years and a tenant trashes the place and then it needs a new roof. So we need 30,000 grand, or we need 30 grand to fix it up and get it back in. I put $30,000 in. Elliot says, I'm not putting in another nickel. My 10 is it. So I put more money in. Now I have a greater interest than Elliot. And let's say we sell the place and we don't even make money on it, but we just sell it. It's being distributed per percentage. So I put in an extra 30 grand. I might not get it back. Elliot's getting, maybe he gets 7 of his 10 back and maybe I get, whatever it is, what was that, 70% of 30 and 10, so 30,000 back. So I get a total of 30. So I've lost 10 grand on this. He's only lost 3. The way around that is I should loan my 30 grand so that I can get paid back my 30,000 bucks, because that's the first thing that comes back. And then we share the loss equally if that's the scenario. So we see this a lot when you're doing joint ventures that flip. And, hey, 10 houses go great. And then you have the one that comes off the rails. You don't want to be contributing more money into it, even though you can, to fix a bad situation. You want to be loaning that money so that you get it back. Otherwise, you're proportionate. And we do see that comes up. Sometimes it's with multiple parties getting together, doing something. It might be 5 or 6 people trying to do a project, and one person is providing a lot of the proceeds. You want to make sure that your initial contribution is all equal, and then after that, make sure it's a loan under those circumstances. You'll see most accountants are trying to make us do loans. They don't really like the contributions, partially for that reason. If you are doing corporations and if you have a loss, then you probably want to be, you want to make sure that you're doing it as a contribution if your company qualifies. So it's a corporation, for example, C or an S Corp, and there you're qualifying, 1244 stock loss.
Actual corp.
That's the only time where you're like, hey, I got to make sure I'm making the contribution in exchange for it. Otherwise, that loan seems to be the best way. Is that how you guys usually do it?
Yep.
Yeah. So some people get mad. They're like, why am I having this loan? And why am I dealing with this interest? We're trying to keep you guys towards in your favor. That's all we're doing. It's just trying to make it. And you say, well, why would you do that? There's 5 or 6 different reasons that you do that are all, none of them good, right? So we're just trying to make sure that you're in the best position possible. Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.